top headlines that we are tracking at this hour. Let's put the spotlight on the oil market then. US President Donald Trump last week levied 25% tariffs on India and also proposed an unspecified penalty for India's purchase of Russian oil and military equipments. India's purchase of discounted Russian oil has come under sharp criticism from US President Donald Trump, who has threatened higher tariffs on India for buying crude from Russia and also allegedly profiting from reselling Russian crude to the global market. Meanwhile, Brent crude is down nearly 9% this year so far. OPEC Plus is unwinding production cuts faster than expected, and the world is reeling with tariff uncertainty. With geopolitics, trade tensions and supply shifting colliding, let's also discuss whether oil is heading towards a deeper correction or if supply disruptions could push prices higher again. Our guest today is Dr. Jeff Brown, President of Research at FGE NexantECA, a leading global energy consultancy. Dr. Brown is also an authority on oil market dynamics, demand-supply dynamics and OPEC Plus policy. Mr. Brown, thank you so much for taking your time out and joining us here today on ET Now. And let's start with the most important question then. How crucial is Russian oil supply in the global oil market? And if Russian oil supply were to temporarily be cut from global oil market, how much impact will that have on global demand-supply dynamics?
Well, thank you for having me. And you actually summarized a lot of the issues very well at the beginning. In terms of focusing on crude, Russia currently only basically sells crude to three different countries. It's China, about 2 million barrels a day, India, about 1.7 million barrels a day, and Turkey is 3 million barrels a day. Realistically, China won't listen to Trump. It's really, I would say, only India and Turkey, when we look at it, that we're possibly listen, sort of impact, might wind down some buying. So it's about 2 million barrels a day that's potentially impacted. Some of that could shift to China. So overall, when we look at the possible impact, it'd be somewhere around 1 to 1.5 million barrels a day. And that's assuming if Trump came in hard, if India said, okay, we need to stop buying, Turkey said we need to stop buying, and obviously that could have an impact on the market. If I could just go a little bit deeper on that, what that would mean is if you knock that supply out of the market, normally prices would skyrocket. But because of the link that you mentioned, as we're moving into the end of the year, it might not be as high as we would normally see, where prices could go over $100 a barrel. We'd be looking at more of the $80 to $85 range. Now, again, we don't expect this to happen, but that's sort of a high case scenario.
Okay, we'll talk about oil prices in just a bit, but before that, Mr. Brown, let's also talk about the alternatives India has. For now, India has maintained its stance that we will buy Russian oil and that we will protect the interest of our customers. But if you can tell us, hypothetically, India were to stop buying from Russia, what alternatives, in your opinion, does India have then?
Well, before Russia-Ukraine kicked off, India didn't really buy much from Russia, right? So it was pretty much Middle East, some West African, and some US. So that's where we were before. I would assume that it would shift back to those barrels, right? So if it moved away from Russia, that's what would be most economically attractive. I would note, though, it wouldn't be at the large discounts that we've been seeing from Russia, because Russia has limited outlets. All these other markets have a lot of outlets. So the reality is India would be back to sort of paying regular market prices for oil.
Okay, so that's as far as Russia's play in the global oil market is concerned. But Mr. Brown, since you were making a point on where oil prices are headed from the current level, if we look at the larger trend over the last 3 to 4 years, oil prices globally have declined from averaging at about $82 per barrel in 2023 calendar year. Currently, they are at what, 68, 69. Do you think that longer-term decline in oil prices is largely structural, or is the decline that we are seeing in the last 1 year cyclical in nature and perhaps temporary, and that oil prices could rebound globally?
Yeah, it's interesting. If you look right at the front of the market's pretty tight. So if we look today, inventories are pretty low, and that's why the price is held up, is sort of in the upper 60s, and we've seen it bouncing around that level, even up into the 70s. When we look ahead, as you noted, we have a lot more supply coming than we have demand. So that would tell us the prices should move downwards as we move into the fourth quarter, especially. But of course, there are buts, and we've seen wars recently. We've seen now threats of tariffs, threats of sanctions, things that could interrupt supply. So if there's no actual interruption to supply, we should see prices come down into the low 60s, potentially even move into the 50s briefly, because of that mismatch between supply and demand ahead.
Okay, so you're expecting oil prices to fall low 60s or even in 50s. That's the word coming in. But that also brings me to the topic of recent output hike that was announced by OPEC Plus last week for the month of September. Now that they've totally unwound the 2.2 million barrels per day output cut that was announced in 2023, do you expect OPEC Plus to now pause after September? And what will your view be on supply from OPEC Plus emerging over the next 3 to 4 months?
We expect them to pause after this. They have the potential to bring back more cuts that they had in place. We would be looking at a pause just to assess. Essentially, everyone we've spoken with at OPEC, they keep emphasizing that we want to be nimble. Okay, we're going to bring this back. So far, it's worked. The price has stayed up quite well, but we want to keep nimble, and we'll look at it every month, look at how inventories are moving, and make adjustments for there. So I think we need to expect an active OPEC ahead, and we need to take them at the word that they will be active.
Okay, so that's as far as OPEC Plus is concerned, but they've also increased their output, and one of the major objectives of that is to reclaim market share. Do you think perhaps a price war could emerge between OPEC Plus and non-OPEC Plus countries going forward?
So far, it looks quite strong. The Saudi leadership of the group has been, everyone's been sort of coalescing around that. Saudi Arabia and Russia have maintained a strong relationship through all these challenges. So far, it looks quite strong. Everyone seems to be quite aligned that they need to bring this oil back into the market. They can't leave it out forever. So far, things look good from their point of view in terms of the cohesion is good.
Understood. And since you made a point on oil prices that they could probably fall into 50s as well, I believe that is for the short term because of OPEC Plus supply, which is likely to rise going forward. But gradually, directionally, if you can give us a structural trend on where oil prices are headed from 80s in 2023 to 70s and 60s now, do you think the longer term oil price decline is a longer term story and that it could play out over the next few years?
Yeah, well, for the next sort of 6 to 12 months, we see quite a bit of supply and those inventories building through the late part of 2025 and into 26. Again, as long as there's no major disruptions, that's where we'll see pressure on price. And the market starts to clean up again and we can see prices rising. So really, when we look over the next 12 months, we're looking at prices in our views bouncing in the 60s. Of course, you can go a little lower, a little higher, but I would plan on prices in the 60s.
You expect prices to remain in 60s at least in the near term. Which will be those 3 or 4 factors that we need to keep an eye out on in the short and in the medium term that could significantly influence the oil market, barring the tariff tantrum that we are seeing?
Well, I mean, you've hit on some of them, right? Tariffs, Trump's always a wild card. He loves to use tariffs as a weapon. We have to remember with Trump, though, he hates high oil prices. So he'll talk, but then the reality is he doesn't want oil prices to go up. So he's been consistent on that. The other thing is Iran, Israel, all these issues have vanished from the headlines, but they aren't gone. They aren't over yet. That's not solved. So those two main issues that we're watching and you've raised before, they still linger in the background. OPEC, of course, we need to watch them for managing the market. I think they would be okay with prices in the 60s, where we think they will fall, where they will move. But we need to keep in mind that that stretches budgets. They won't like prices to go a lot below that. So basically, disruptions, Trump, OPEC. Those are all the things we're watching.
Disruptions, Trump and OPEC, those are the three factors that we need to keep an eye out on for the oil market going forward. Mr. Brown, thank you so much for taking your time out and joining us here today on ET Now and helping us decode the factors influencing the oil market and what's the outlook going forward. Thanks so much for joining us today.
Thank you.
That's all the time we have on this edition of Commodity Central, but no more news and updates will continue on the other side. Don't go anywhere.